You want to get yourself a loan, a car, a place to stay, whether it is financing or leasing in both cases, or you want to increase your chance to get the job you always wanted. Well, all of these elements that seems to be essential for a normal standard of living, well, they all have something in common. Is that the party in which you want to make a deal with, they will consult your credit file. What is that?
It's a potato.
Well, this might come as a shock to you, but no, it is not a potato.
What? Then why am I here then?
I don't know.
Yes, in this video in which we're going to explore the different elements that are included in a credit report, well, we decided to include the farmers from the 1930s to learn with us. So, what are these elements included in a credit report? Well, there are many, and this is what we're going to see in this video.
I could have been taking out manure, but no.
So what is a credit report? Well, a credit report is the registry of all of your financial activities that involves borrowing. It is all of your consumer debt account, which are credit card, line of credit, payments on your car, student loans as well. It is what you have. The report will show what you have currently, but as well as what you had in the past. So it's really your credit history. But let's make sure it is credit, it's everything that you borrowed officially. So you won't see any IOUs that you have with your friends or relatives.
You have no idea how this makes me happy.
But most importantly, the credit report is made to know if you're making your payment on time. So they will show your behavior. If you make your payment on time, they'll show it. If you're late on payments, they'll expose it. Whether it's 30 days, 60 days, 90 days, or even 120 days. And other things, other negative elements, such as write-offs, collection, judgments, and bankruptcy. And all of these negative elements, they will stay on your credit report for a period of 7 years.
Phew! Yikes!
Other elements can be seen on your credit report, such as your address and your employment status. So basically, you can see that there's a lot of information there, and the person in which you want to make a deal with, you're going to be pretty well informed by consulting your credit report. The report itself tells a lot about you. It tells about how you manage your personal finance, your lifestyle. It's basically reflecting who you are.
But it does not grasp my feelings.
How do banks evaluate your credit application?
Let's take an example of a bank, okay? You want to apply for credit. Well, in that case, they're going to check for two things. First thing, they're going to check on your reimbursement capacity. And this, they're going to measure it by calculating your debt ratio, okay? And second, they're going to check your will to reimburse. They pull out your credit report and see what you did in the past. So this is how they're going to analyze your credit application. But in the case you have no experience, you're not going to be able to prove that you were a good payer in the past. Like we said, they're not going to show any IOUs to friends and relatives. In that case, you might want to build some experience. So you get yourself a credit card with a small limit, and you use it every month, and you pay it on time every month. Like this, you'll build some experience. And I'm telling you, you can have a pretty good credit score just by using one single credit card that has a small limit. If your credit file is impeccable, well, good for you, but this video really addresses on people who have a lot of room or some room for improvement.
Well, I do have a little bit, lots of room!
Where do credit scores come from?
First thing first, if you want to improve your score, well, you need to know how the system works, right? Yes, there is a system. Because whenever someone pulls out your credit report, well, there's an algorithm that takes all of your information, all the data that you have in your report, and they're going to give a score. This score is called the Fico score or the beacon score.
Nice. Bacon score.
No, it's beacon score.
Bacon score?
No, it's beacon score.
Wait, I got it. Bacon score.
It's beacon score.
Bacon score.
Farmers from the 1930s. That might have been a mistake.
This beacon score is scaled from 300 to 900, and it really helps to identify rapidly if you represent a risk. Let's say you have a score of 700, you're supposedly a good payer. If you have a score of 500, you represent a risk. So the better you pay, the higher your score. The more you have negative elements and you pay late, well, the lower is your score.
So what you're trying to say here is that the more you're making bad payments, the more your score becomes less big.
How do they come up with that score?
So what do they use in that algorithm in order to know if you represent a risk or not? Well, it's more than one element, and it's not only based on if you're a good payer or a bad payer. So let's see what they are in order of importance. First one, payment history. Yeah, well, of course, that's the most important one if ever, if you're a bad payer or good payer. So if you're paying your bills on time, well, good chance that your score is going to be high. Second element is your credit utilization. What is that? Well, a credit utilization is the amount that you're borrowing from the limit. Yes, if ever you have a credit card, they will lend you a credit card with a certain limit. If your balance is getting really close to your limit, this is high credit utilization. So the closer you have your balance to your limit, the more you represent a risk. Third one is your length of credit history. This one is pretty simple. Well, the older your account is, the better it plays on your score. Fourth one is the amount of inquiries and new credit that you applied for in a short period of time. If you did so, well, you represent a risk because it shows that you're in financial difficulties. Fifth one is credit mixed, is your ability to pay revolving credits as well as term loans. Revolving credits being credit cards and line of credit, and term loan is meaning one payment per month, let's say.
Beacon score. Okay, now I got it.
Okay, so if you apply on these 5 elements, well, you have a good chance to improve your score and maybe avoid borrowing from unwanted people.
Well, that reminds me of...
Yes, now you understand why you're in that video.
On behalf of my friend that just spoken, hope you liked that video. If you want to learn more about how to manage your finances, please subscribe and you'll get some more videos. But the next time it will be from me, the real thing. I don't like farming. Oh no. I love it. I don't like farming. Oh no. I love it. Dreadlock holiday.